Welcome to Stocks Telegraph, your ultimate source for all things related to the stock market. In today's video, we're going to talk about IPO investing and what you need to know before buying a new stock. IPOs, or initial public offerings, can be a great opportunity for investors to get in on the ground floor of a company's growth. However, they can also be risky if you don't do your due diligence. In this video, we'll cover the basics of IPO investing, including how to research an IPO, what to look for in a new stock, and how to manage your risks. An IPO is the first time a company's stock is offered for sale to the public. Before an IPO, a company is typically privately owned, with its shares held by a small group of investors, including the founders, employees, and venture capitalists. When a company decides to go public, it hires investment banks to underwrite the offering, and help it sell shares to the public. The shares are then listed on a stock exchange, where they can be bought and sold by anyone. Investing in an IPO can be an attractive opportunity for investors. By getting in on the ground floor of a company's growth, you have the potential to earn substantial returns if the company does well. In addition, buying shares in an IPO can give you access to a company that you may not be able to invest in otherwise. For example, some popular tech companies, such as Facebook and Twitter, were only available to institutional investors before their IPOs. Research is key when it comes to investing in an IPO. Before you invest, you should learn as much as you can about the company, its management team, its financials, and its growth prospects. Here are some ways to research an IPO. A prospectus is a legal document that provides detailed information about the company, its financials, its management team, and its growth prospects. This is the most important document to read before investing in an IPO. Look at the company's revenue, profits, and cash flow to get a sense of its financial health. Examine the track record and backgrounds of the company's executives and board members, to determine if they have a history of successful business ventures. Consider the company's position in its industry and the competitive landscape, to see if it has a sustainable competitive advantage. When evaluating an IPO, there are several factors to consider. Here are some key things to look for. Look for a company with a strong balance sheet, growing revenue, and positive cash flow. When researching an IPO, it's important to search for a company that offers a distinctive product or service, boasts a robust brand, or has some other edge that sets it apart from its competitors in the industry. Seek out a company whose management team has a proven track record of success and experience in the industry. Consider the valuation of the company in relation to its peers and future growth potential, and ensure that it is reasonable and justified. Investing in an IPO can be risky, so it's important to manage your risks carefully. Here are some ways to do that. Don't put all your eggs in one basket. Make sure your portfolio is diversified across different sectors and asset classes. IPOs can be volatile in the short term, so it's important to have a long-term investment horizon when investing in IPOs. This means being patient and not reacting to short-term price fluctuations. Before investing in an IPO, make sure to research the company thoroughly. Look at their financial statements, management team, and competition to get a better understanding of their business model and growth prospects. Many IPOs have a lock-up period, which is a period of time after the IPO where insiders are restricted from selling their shares. This can create additional selling pressure once the lock-up period expires, so it's important to consider this when investing in an IPO. Keep a close eye on your IPO investments, and be prepared to sell if the company's fundamentals deteriorate or if the stock price declines significantly. In conclusion, investing in an IPO can be an exciting opportunity to get in on the ground floor of a new company. However, it's important to approach IPO investing with caution, and to do your due diligence before making any investment decisions. By diversifying your portfolio, investing for the long term, researching the company thoroughly, considering the lockup period, and monitoring your investments, you can manage your risks and increase your chances of success in IPO investing. As always, consult with a financial advisor before making any investment decisions. Thank you for watching Stocks Telegraph. Don't forget to like and subscribe for more informative videos on the stock market. And for more detailed articles and stock market news, visit our website at stockstelegraph.com.